Why is the government of Jamaica lending money to the Jamaica Public Service Company, JPS? Why can't JPS fund its own restoration efforts? And most important, how will this all affect your pocket, your bills, and your business? Today on Building Wealth with Wisdom, we break down the real reason behind the US $250 million restoration bill, the government loan, the license drama, and the impact on your money. I'm your host, Adrian Adman, CEO and founder of Wisdom Finance Solution. Let's get into it. Today's episode cuts straight to one of the biggest financial and national issues emerging after Hurricane Melissa. Why the government of Jamaica lending money to the Jamaica Public Service, JPS. How we reached this point and why every Jamaican, whether you live in Westmoreland, St. James, Hanover, or the Kingston metropolitan region, you need to pay attention. So, what happened and why are we here? On October 28, 2025, Hurricane Melissa devastated 7 parishes, damaging power lines, poles, major transmission routes, and substations. The destruction was so extensive that JPS estimated full restoration would take until the first quarter of 2026. But here's the shocker. The total restoration bill is approximately US $350 million, and JPS has said that they cannot secure the financing. Why? Because back in July 2025, the government, through the Energy Minister, Vaz, told JPS that their license would not be renewed in 2027 under the current terms. And of course, that created a major uncertainty. Financial institutions do not like uncertainty. So, of course, JPS is saying no one wants to finance them. So you may be asking the question, why does JPS need a loan and doesn't JPS have enough cash? Well, JPS does have operating cash, but not enough to fund a US $250 million emergency rebuild, as they are on a 2-year clock on their license. JPS's most recent financial statements indicate that they have approximately $69 million US as of March 2025, moving from about $47 million US in December 2024 at their year end. Now, this scale of reconstruction goes way beyond their normal operation. And so, JPS has majority shareholders who are Marubeni Japan and Korea East West Power, who owns approximately 80%. Government owns 19.99%. And of course, the majority shareholders are being asked to cover a part of the cost, but they are not prepared to inject US $350 million upfront, especially while the license renewal dispute remains unresolved. So JPS asked the government for a 15-year extension on the license, essentially trying to stabilize their long-term business model. But the government rejected that request. Yet, restorations could not wait because 7 parishes were in an electricity crisis. The country cannot function without electricity, and the longer the western parishes stay in the dark, businesses can't operate, tourism is being affected, agriculture is being affected, households are not safe, and the national tax revenues will drop and economic activity will slow. So the government has stepped in with a temporary financing package, not because JPS is special, but because the alternative would be for the national economy to come to a grinding halt. As such, the government has agreed to loan the JPS US $150 million. In addition to that, the JPS has applied to the Office of Utilities Regulation, the OUR, for US $50 million from the Electricity Disaster Fund, leaving a remaining US $150 million for the JPS's majority shareholders to finance. But there is a risk to the government of Jamaica. And some commentators, including the opposition, warned that if JPS defaults, the government and taxpayers like you and me could be exposed. However, the government has stated that their interests will be protected and they can acquire JPS assets at an agreed valuation if necessary. So what does this mean for customers? Well, it means that if it is that the government and the JPS cannot find the necessary financing, we would have longer periods without electricity. What that means, you would have loss of income for small businesses, tourism workers would still be impacted, vendors would be impacted, the environment would be unsafe, and of course, you'd have the continuous spoilage of food and perishables, children missing their online schoolwork, and adults not being able to communicate, right? So people in these parishes are paying the highest price, not just financially, but emotionally and socially. So what about customers who are in the other parishes who are indirectly impacted? Now, here's the part people don't want to hear. Longer restoration times and higher operational costs could eventually mean higher bills for everyone. Even if your parish wasn't directly hit, the cost of rebuilding the grid is massive, and utilities often spread the cost across the entire customer base. While the government loan solved the short-term crisis, the long-term cost structure still matters. But this electricity crisis does not only impact JPS customers. The government of Jamaica is impacted through lost revenues due to the shutdown of businesses, lower production, slower economic activity, and higher temporary welfare needs in the impacted parish to provide relief to the people who are suffering. Now, this is why the government is pushing for fast restoration, even if they must temporarily front the money, and the national recovery depends on electricity. However, we have not got the details of the loan, and we expect that come Tuesday, December 2nd, that the Finance Minister, Favour Williams, will provide the details on the terms of the loan. The government has said that they are willing to acquire the assets of JPS should there be any type of default, and as such, we watch this one carefully. I am Adrian Adman, and this has been Building Wealth with Wisdom. If you want clarity, context, and smart financial insights about the issues that affect your money, this is the place to be. Don't forget to like, subscribe, and share this podcast to your friends, your families. Until next time, walk good, stay wise, and keep building wealth with wisdom.